You have quite a bit of experience in venture investing. One would really want to know what the kind of interesting trends that you see in venture investing in India.
Multiple areas that we find interesting right now. Certainly, we're starting to see some very interesting innovation starting to happen as it relates to automating IT delivery and IT services. So we're looking at those kinds of companies. We believe that that's a very interesting trend, starting to see some real IP companies getting developed in India, getting started in India. I think the other area that we're finding quite interesting is the whole area of medical devices and medical informatics. That's the second area, and we're active in that area. And the third area, although it is a little overheated right now, is the consumer internet area. And so, our interest there is to get in earlier when the valuations are still under control versus waiting, because then these valuations get very, very difficult to manage. So those are sort of roughly the three areas that we're very interested in right now.
Venture investing in India is kind of taking off now, especially with an exit like Make My Trip or Just Dial kind of slated for public listing. So what are your kind of some of the thoughts there?
I think it's fair to say that in certain sectors, companies are growing very rapidly, and therefore, you see the possibility of exits happening in those companies. And certainly, some of those exits are going to be via IPOs, and some of them are actually going to be via IPOs on NASDAQ or NYSE. And so certainly, there is a certain amount of excitement about that.
Becoming increasingly difficult to deals, valuations are very high. We also hear that deals are being run by promoters on the promoter terms. Any kind of thoughts there?
I think the area where at least we have seen conditions that are very difficult to deal with are not so much terms and conditions as much as the valuations. See, especially in the consumer internet space, valuations are getting bid up quite a bit, which makes it very difficult to do some of these deals. And so, there are certain deals that we have just walked away from because the valuation expectations were just not making any sense to us. In other words, it was very difficult for us to envision how we would be able to make money. So our goal, therefore, is, and that's one of the advantages we have, working on VC investments in the early stage. We do a lot of those in the US, we do a lot of those in China, and so therefore, we bring a certain element of expertise, and so therefore we get in earlier into those firms when the valuations are still manageable.
We saw a lot of US funds which began as technology-focused funds and then of late diversifying into being, sector agnostic or stage agnostic.
So, it really depends upon, the expertise that you have. So, our fund, has a 50-year history, and it's a large fund. So over the years, we have played in all these various sectors in the US. So whether it's consumer internet, whether it's hardware, whether it's software, whether it's IT services, whether it's healthcare. And then, we do both early stage, we also do late stage and PE stuff. Been doing that for 50 years. So it depends on what your background is, right? Now, if you have only done IT and if that's all you're familiar with, and if tomorrow you just want to change directions and want to do healthcare, but you have no expertise, then that's a problem. And at least in my view, I might be biased about it because we are sector agnostic, but we are deep in sector domain expertise in a lot of different sectors. Right, so it's easy for us to invest across multiple sectors. Now, that's not necessarily true of every fund out there, right? And so I would therefore be somewhat cautious about, from an entrepreneur's perspective, as to who they work with, because at the end of the day, when entrepreneurs choose to work with a fund, they are looking not just for money, but they should also be looking for expertise and contacts and business models and advice that they can get.
In terms of action from novice venture partners, what do we see going forward the next 12 months?
No, so again, like I said before, we work in multiple sectors. We're stage agnostic. So what you will see from us is investments in early stage. You'll see us investing in late stage. You will see us investing in health services. You'll see us investing in medical devices. You will see us investing in software companies, IP-based software companies. You will see us investing in IT services companies that are developing IP. And you will also see us doing infrastructure, and you'll also see us doing consumer internet, because we have a large fund, right? And we've been doing this for 50 years.
The last fund, how much of that corpus would come to India? I'm understanding India is kind of key market for you.
Well, so we don't do any allocation, right? We look at things on an opportunistic basis, and if we see a deal, it's evaluated on the merits of what kind of a return we think we could get, and also what kind of a market size it's addressing, because we want to make sure they're addressing large market opportunities and so on. So we don't do any sector or geographic allocation. We just do that on the basis of, we work as one team, and we look at deals on an opportunistic basis, and if there's money to be made, we chase that deal.
With a lot of Indian fund managers who are out on road for fundraising, for independent fund managers, or people kind of raising follow-on funds. What are your thoughts there?
So, my thoughts might be somewhat biased in the sense that, because we've had a long track record, right? And like I said, our fund's been around for 50 years. We actually just celebrated our 50th year this year. The fund was formed in 1961. I joined in 1989. So, because of our long history, our issues are different than, a lot of funds. So, we raise funds on the basis, obviously, of our track record over a very long period of time. And so, one would say it's a lot easier for us to raise funds, perhaps, than someone else.
In cloud computing?
Oh, yeah. Well, I think cloud computing will come to India as well. It has already. It's a rage in the U.S. right now, and it's impacting a lot of things in a lot of different ways. It's impacting IT services, obviously. It's also creating a lot of new entrants in the marketplace. It's changing the business model of a lot of companies, even larger, companies, IT providers and software providers and so on. And I think that ramification will be felt here in India as well.
You're investing in those kind of places?
Oh, yes, absolutely. We would look at investing in cloud services companies in India.
Any particular sectors are particularly bullish about, and perhaps you would want to see such action which is not there in India?
I think if you look at the Indian scene, certainly consumer internet is hot, right? And I think if you look at Wall Street, they're very appreciative of that as well. And so, they are looking for consumer internet companies, and they're looking for consumer internet companies not just in the US, but they're also looking at consumer internet companies in China and in India. And China and India excite them, consumer internet, because they look at the macro trends, high GDP growth rate, high and growing middle class, and high disposable income in the middle class, right? I think by a similar analogy then, and similar reasoning, the healthcare sector is also very interesting, because when you have a growing middle class with high disposable income or increasingly higher disposable income, healthcare is a very important issue for a lot of people, for everyone. And so, healthcare companies also, I think, are going to see some very rapid growth and very rapid adoption in the marketplace.
There's a general view that there will be a shakeout in the venture capital or PE industry in India. Too much capital chasing too few deals, a lot of fund managers. Well,
I think, anytime too much money gets raised, right, you always do see a shakeout. That happened in the US. It started in 2000. And, as you know, venture funds and PE funds have a long life cycle. And so we're only in the last few years starting to see a shakeout, and the net result of that is that a lot of funds, especially funds that didn't have a long track record, are having a hard time raising money again in the U.S. And so the larger funds are getting larger because they have a long track record, and then some of the funds are disappearing, and then some of the funds are actually shrinking. And I think it's fair to say that, that is very logical, and I think that logic will extend to China and India over the long run as well. Anytime too much money comes into the system, it is not good, because it creates a challenge in that valuations get sped up, and then you start to see lowering of the returns, and then the LPs sort of feel the effect of that a few years later, and then they get cautious. And so I think that cycle goes on. So it's happened in the U.S., and I think you will see funds getting smaller, some funds getting, not all, some funds getting smaller in China and in India over the long run.
How is the venture or the private equity scenario different in China compared to India?
Yeah, so I think, again, it goes in cycles, right? And so, yes, one could argue that certain sectors in certain countries have gotten a little out of control, and so you could argue that, the consumer internet valuations got overbid in China, and, there's a sort of a general gradual correction that is taking place. And I hope that the same thing doesn't happen in India, but to some extent I think it will. You will see some valuations of some of these companies get overhyped and overbid, and then I think you will see a correction in that. In the private market itself, when these companies then go public, they're not going to get the same valuation that everyone expected. But that's always there, and it's always been there ever since I've been in business. You see these cycles where valuations get sped up and really bid up, and then they slow down over a period of time. So it goes in cycles.